Headline: UK inflation plunges to 2.6%, fueling rate cut calls. The UK's inflation rate unexpectedly plummeted to 2.6% in March, significantly lower than market expectations and sparking intense speculation about an imminent interest rate cut by the Bank of England (BOE). This dramatic fall, defying forecasts of a more modest decline to 2.7%, follows February's drop to 2.8% from 3% in January, primarily driven by a cooling in clothing prices. The unexpected good news throws the spotlight firmly onto the BOE's Monetary Policy Committee, MPC, as they prepare for their upcoming meeting next month. The lower-than-anticipated inflation figure represents a significant shift in the economic landscape, putting immense pressure on the BOE to consider a rate reduction. The central bank has been grappling with the delicate balancing act of managing inflation while stimulating economic growth, a challenge further complicated by the ongoing uncertainty surrounding Brexit and global trade tensions. The March figures, however, paint a compelling case for easing monetary policy. The considerable drop in inflation, coupled with the looming threat of rising household bills, presents a compelling argument for a proactive response from the BOE. The potential for a dampening effect on consumer spending and broader economic activity due to increased energy and living costs adds further weight to the calls for a rate cut. Leading economists and former policymakers have already voiced their support for a rate reduction. Charlie Bean, a former deputy governor of the BOE, recently argued that the uncertainty surrounding tariffs and global trade justifies prioritizing economic stimulus over inflation concerns. He advocated for a rate cut of at least 0.5%, a bold suggestion reflecting the gravity of the situation and the need for decisive action. Adding his voice to the chorus, former Prime Minister Gordon Brown has called for a coordinated, global rate cut by major central banks, suggesting a collaborative approach to address the potential for a broader economic slowdown. The timing of this significant drop in inflation couldn't be more crucial. With household bills set to increase this month, placing further strain on household budgets, a rate cut could provide much-needed relief and support consumer spending. This, in turn, could help to mitigate the potential negative impact of rising costs on economic growth. The BOE's decision next month will be closely watched not only in the UK, but also globally. The bank's response will be a significant indicator of its approach to managing the current economic climate, characterized by uncertainty and conflicting pressures. The upcoming meeting will be a pivotal moment, shaping the direction of the UK economy and influencing monetary policy decisions across the globe. A rate cut would send a strong signal of the BOE's commitment to supporting economic growth in the face of potential headwinds. Conversely, maintaining the current rate could signal a more cautious approach, prioritizing inflation control above all else. The coming weeks will be crucial as economists and analysts dissect the March inflation figures and assess their broader implications. The debate surrounding the appropriate response from the BOE will undoubtedly continue, and the MPC's decision will be a defining moment in the ongoing narrative of the UK's economic recovery. The suspense is palpable as the nation awaits the BOE's announcement, hoping for a decision that will effectively navigate the complexities of the current economic climate and pave the way for sustained and inclusive growth. Further updates and analysis will be provided as the situation unfolds.